Doug, good afternoon.
What's up, everybody?
It's a beautiful day in snowy Carmel, Indiana.
You wanted to do a market update. Is that what we're doing?
We are doing a market update, and we are gonna uh, do that right now. Uh, if as soon as I can get I don't know about this disclaimer thing, Doug. So you're the compliance officer of Gimbal World
Okay.
headquarters,
I can,
but
I can, I've got it memorized.
well, I was going to say the main thing in Carmel you might want to do today is consider a pair of yak tracks during the winter time. Strap those bad boys on your shoes and gain some stability. But why don't you tell them about the market disclaimers real quick?
Yeah. Okay. So we're going to be talking about the market in general. And whenever you hear the stock market, what most people are talking about is the S&P 500. It's an index. It's a capitalization weighted index of 500 stocks designed to measure the performance of the broad domestic economy. And so that's the S&P 500. There's others like the Dow Jones Small Cap 600 index. We talk about the NASDAQ index quite a bit. It's probably my favorite. I don't know if you have a favorite, Keith. The one that makes money, that's your favorite.
It is exactly.
But hey, these thoughts are and opinions are those of Gimbal Financial. And as Keith often says, I think he learned this from his Hilliard Lyons friends, was we might be wrong, we might be right, but we will not be indecisive. And so that's where we see it. That's how we see it today. Let's look and see what's going on in the markets, Keith. Oh, last thing, these are not these are not any type of trade advice for you. Talk with your financial advisor. Okay.
So here's what prompted my thoughts on this thing, Doug, is that um, the um, election normally is 49% one side of the major parties and 49% on the other side of the party. So it's really never nothing major is going to change on an election like for an individual voter. Like the majority, like 98% of the voters are going to vote how they're going to vote, no matter who the candidate is. And yet every presidential election that I can recall has created a lot of anxiety for people. And so I've heard some of that anxiety over the last few days as I've made conversations with people. And I thought, well, let's just have a market update where we can talk through what we think about that and just address where we are today. So if the voters are 50-50, guess what? Everybody that votes on a stock is 50-50 because if you buy or sell a stock, there was somebody on the other side of the trade. So somebody completely disagreed with your opinion in order for you to sell or buy a stock. There had to be somebody on the other side who thought you were crazy. And so that's what happens with every election, I think. I think it's more political and more emotional today than I can recall, but we're we're entering a new season in the political force, and I don't know that that's the big deal so much as entrepreneurial creativity as we go forward.
Yeah, that's a good word. Keith, are you able to pop open the S&P or what index do you want to start with?
Well, I was going to start with the idea that with those different opinions, the Oracle of Omaha, um, I'll show a quick chart from Warren Buffett and the folks at um, Berkshire Hathaway. Can you see this chart, Doug?
Yeah.
What this shows you is it goes back more than a decade, and it shows you the dollar amount of cash that Berkshire Hathaway as a holding company has. And really, since about 2023, they have been increasing their cash holdings to the point that they're up over $325 billion in cash. And so, just like I was saying earlier, there's a different opinion on every trade. That's some of the kind of one of the pessimistic kind of point of views about the overall market right now. Here's the S&P 500 right now, Doug.
Okay. Yeah. Boy, that's a great picture. Look at that. Okay, so we're looking at a daily chart of the S&P 500. It's been a long time since we've talked about this on a live broadcast, Keith. But yeah, Keith's drawing a trend line there, and you can see if you just were to take a step back and throw this chart on a wall, you'd say the overall trend has been up, and that's been really, really cool. Underneath these lines that Keith's drawing, I don't know if you could see, but there's a black line that's underneath all of the vertical lines, and this black line is a 200-day moving average. That's a line of importance, and basically when prices are above the 200-day moving average, that's a positive thing. It's a positive time to be a stock investor. When prices go below the 200-day moving average, it's a lot more challenging. And so that's an average that we pay close attention to. And Keith, right now, if you hover over, how far ahead are we on the 200-day above the 200-day average right now?
We are, looks like 9.6%. And I was just going to go back over here to March, where we, well, why is it not populating? There we go. We were almost 14% over here in March. So we're, um, with those trend lines I drew, Doug, you can kind of see where it looks like things have kind of, they were ascending at a much faster pace at the end of last year and the beginning of this year, and then they kind of flattened out a little bit. In my
Yeah,
opinion, like where I've drawn some channel lines there, that slope that we're kind of experiencing now seems a little flatter than what we had the first half of this year.
we're about 13 months into this newest uptrend, which is just it began in late October last year. The tech stocks started to really come out of the gate strong, and for a long time it was just the Magnificent Seven, or the top leading stocks like the Teslas, the Apples, the Amazons, the Netflix, the Googles, Nvidia. Those types of stocks were really leading the way. And the thing that I like most about this market, we're looking at the NASDAQ now. The thing that I like most about this market is it's started to spread out. And for some of you, you've seen that in your portfolios with some of the additions that we've been buying lately. But it's starting to spread out, and we're seeing some of the smaller to medium-sized companies get some traction, and that's been the most encouraging thing in this market to me. The fly in the ointment, I think, is it's frothy, and there's a lot of optimism. When I walk around and I hear people saying to me, "Hey, have you bought MicroStrategies? Have you bought Bitcoin? Have you bought Nvidia?" When I'm hearing specific names, and hey, no offense if you're watching this and you've shared these names with me. No offense to you at all. I'm just saying, when I hear these names over and over, I start thinking, is this an indication for a sell-off? And I'm not wishing, I'm past those days where I'm telling you what I think is going to happen. I'm just trying to get in line with what the market is and what's going on. And overall, we've had a great uptrend, and I'm just grateful for it.
And this, I had mentioned this to you, Doug. This is a chart that I kind of keep behind the scenes, and basically, the way I printed it here is not very legible. Sorry about that. But uh, from our database, this tells me how many stocks we have in the database, and then this tells me how many of those companies are either below their 21-day, their 50-day, or their 200-day moving average. What number of them are, and when I highlight it in yellow, more than 50% of them are below that moving average. And so even though we're seeing some participation in the broader stocks, there's still a good number of stocks that are really struggling to find a home, which just says, hey, um, selection is important, and
Yeah.
that's kind of where things are. I'd say I guess the one other thing I'd throw out there to our friends is that another fly in the ointment um, is what's going to happen with inflation, what's going to happen with interest rates. We had, with this chart here, I'm showing you the last, like for 2024, the 1-year Treasury, and how that interest rate has fluctuated year to date. And you can see if you had money in a money market account earlier in the year, you're getting 5.2%. and it dropped down below almost to 3.8%. And it just in the last 45 days or so has kind of started ticking back upwards, which just says that um, there's some dissenters that think that interest rates could be going back up. So we'll see what that does to it, because the stock market is always a tug of war. Do I want to put my money at risk for an unknown rate of return, and at the, at the 5% rate of return on guaranteed money? There's a lot of people that are saying, you know what, I'm kind of okay with that. I'll just sit my money there. So it's just a tug of war to see where capital flows.
Yeah, and for the investor guys, I'm just so grateful for these options for you. There were so many years where the fixed rate of return on a money market was just nil. It was not even worth writing home about. And so for you savers out there, high fives to you to have another choice other than the stock market. It's been good.
Absolutely. Well, I'd say my bias today, if anybody asks my bias, I'm biased towards a buyer of the stock market, and I'm optimistic, and that's where I am as of November the 21st, 2024. How about you, Doug?
At 1:55 p.m. I would agree with you. That can all change. Oftentimes, I feel very bipolar on the stock market. But if you were to ask me, hey, what's this look like? I think what this looks like for 2025 is we're going to have some inflationary threats, and stock selection is going to be key. It's going to be key to take a look at different industry groups, and money will go to where it's treated best.
And specifically, your money will, because we will be proactively making decisions on your behalf, and we appreciate your trust for us to be able to do that for you.
Keith, that's all I know.
All right, Doug, I will see you sooner than later.
Bye bye.
Bye.